person that can figure out how to buy real estate creatively and hold for a long period of time is going to win. And I do think this debt market is going to cause more deals on the street where you can pick up at 30, 40% off, 20% off, whatever the case is. I think there's still an amazing opportunity to buy real estate.
Welcome to another episode of the 0 to 100 podcast, the number one real estate podcast in the world. I am Gabriel Hamel. I'm here with Travis Dillard and Mitchell England, and we are showing up today to provide as much value as we possibly can. We will talk all things. What's the subject today? It's real estate. All right, here we are. Let's go.
I think we should change it up today and talk about cash flow real estate and using the vehicle of real estate to achieve time freedom. We're going to talk about buying ranches today. We're going to buy ranches. So let's catch up on what's happening with everybody. Let's see. We are recording this podcast episode July 8th, 2025. And there's more talk about tariffs. I was actually reading an article this morning. There's a lot of, angst, and I'm kind of getting pissed off about it too, because before, when equities would drop, people would jump to bonds, right? That's how you carried a balanced portfolio. When those financial advisors would, just put half your money in on equities and half in bonds, and then take 1% to 2% and then buy a boat. Now they can't really give that advice anymore because people are fleeing. Like if equities drop, like bonds drop too, because people are jumping out of bonds. Like there's a big sell-off in bonds. And I think a lot of people don't understand how that affects mortgage rates. But when people flee out of bonds, the yields rise actually. And if you think about it, that's because if there's less demand driving the price to buy bonds up, it's driving the price down, which drives the yields up as it relates to the price. And a lot of people don't understand that bond yields are interest rates with mortgages, especially commercial mortgage rates, residential mortgage rates are tied to the bond market. And we've all been sitting back. Everybody waits for the Fed to lower rates, which they seem to be staying steady at this point. And then it's pissing our president off because he's like, we need to be at 1%. And Powell's just like, yeah, fuck off. We're just going to just sit here and sit here and sit here. I mean, that affects the overnight borrowing rate, but it's killing the mortgage interest rates. Like
when I hear you say all that, my mind immediately goes to like, all right, how does that affect us as real estate investors? How does that affect interest rates? How does it affect prices? Like, how does that affect all that stuff?
Well, it affects us greatly because, and again, people are always watching the Feds. And I get it. When the Feds start lowering the rates and they start going dovish, then markets respond better. People get more, bullish on the US dollar and the treasury markets. But right now, I was wondering the same thing. First of all, for those of you that are listening, interest rates play a huge factor in the commercial and residential real estate market, right? When rates are high, people need to buy properties for less money because they need to get a spread between the cap rate and the interest rate, which drives prices down. So it's inversely proportional. Interest rates are up, prices are down. So people actually lose equity, right? They lose value in their properties because people need to get a spread and they need to pay lower prices. But also refinances are really big. There's a lot of people in trouble right now, and we're seeing it, where they were buying properties at 3% and 4% interest rates, whether they were apartment complexes, mobile home parks, or whatever the case is. And they were buying on, 3 to 5 year notes. Those are coming due. And now their mortgage payment is doubling in some cases, which if they weren't buying with sound fundamentals to begin with, it was really, really bad. And so I think you're going to see some blood in the streets. And I was wondering the same thing, like you're asking, Gabe. I'm like, well, what the hell? If people are fleeing the bond markets, because the US bonds have always been like considered almost risk-free, right? But if people are jumping out of bonds, they're seeing that the US bond market is risky, which is going to drive the yields up, which is like, that's more of a systemic issue in my mind.
How do you think that it's the local market? So, because it's really interesting. I mean, I got a buddy in Austin that said, prices are down 30% and possibly coming down another 20%. So we're talking like 50% drop in price. And then I'm seeing other markets like out here in Oregon. I received a couple full price offers on some of my properties. They're going for the same price they would probably go for a year ago, 2 years ago. So it's interesting. I don't know if that's just the markets that were overbuilt, highly inflated over the last couple of years are now just clawing back to where they should be. But it's interesting how differently it's affecting different markets.
Real estate is a psychological game, and it's based on fear and greed and also confidence. And during a time of change, I think it's polarizing. You have half of our country that believes we're going in the right direction, half believes that we're going in the wrong direction. I've heard people in the same day say, hey, I'm going to go buy as much real estate as we can because things are going in the right direction. And literally in 30 minutes, somebody says, look, I'm selling everything and moving to a different country. And so you have half the country scared of the unknown. You have the other half of the country saying, oh, we're going in the right direction. Depends on where you sit politically and policy. You don't have a country that's like the majority of the country is confident in the path forward. You have a large group that's not confident in that. And I think that affects real estate psychologically. And then you have the bond market's a reflection of the confidence of the US dollar and US debt. People fleeing that is showing that there's a lack of confidence potentially in the future, at least in that sector or that sort of like. So I think it comes back to what we preach all the time. How do you buy real estate on fundamentals that prepare you for changes in the cost of debt? The cost of debt's going to change, and we can't predict that. And whether it's a president or administration changing that, or some other event in the world, or war, or COVID, or whatever that is, I think the only thing that I can sort of surmise is that the cost of debt's going to change. It's going to fluctuate. And because of that, we have to buy on fundamentals that make sense and account for that change in the cost of debt. And if you don't do that, like you said, Trav, you're in trouble.
Where do you see the opportunity then? I mean, I think looking at this through the lens of, hey, I'm a newer investor, or hey, I'm a very experienced investor, or somewhere in between. I mean, I think our listeners, we have people listening to this show who have never bought their first property. We have people, they own thousands of units. So thinking about this, I think we're all opportunists. I say often it's always a good time to buy if you buy right. But even those that were buying at, 3.5% mortgages, maybe they stress tested to 5.5%, 6% interest rates, and then it bumped up to 7%. So there's always going to be these unknowns, but knowing what you know today, right now, for any investor, where would you say the biggest opportunities are?
I think if anybody owns property has intrinsic value, they should sell to us at 50% off. I think that's where the biggest value is. I think people should really consider, I mean, I don't know. That's an interesting question. I think we are somewhat in uncharted waters because you've got our bond yield's going to come back down. At the same time, though, you had stagflation in the 70s where, interest rates were double digits. People were doing fine. I think people did, whenever there was some adversity, people had done really well. I think it comes down to, I think people that will do really well, first of all, there's other fundamentals are working in favor of real estate. I was reading another article, at least when it came to multifamily yesterday, home ownership is really tough. First-time home buyers are getting kicked in the face, right? Inventory's down, home prices are up, and then on top of that, you've got interest rates that are in the high 6%, 7%. So home ownership is unattainable. So landlords are winning, right? So again, there's always puts and takes. Landlords are doing well, but they're also talking about if rates do come back down to earth, there's this amazingly high pent-up demand for first-time home buyers, which is going to hurt the rental market. I think the person, he or she that can be creative and structure deals creatively, I think are going to win. Because there's always a reason to sell, right? That's the thing people forget and they don't understand. Real estate's an imperfect market. Death, divorce, retirement, moving, I'm 80 years old. I just want to get out of the game. I think there's always a great reason. And I think the person that can really look at a deal, look at the fundamentals and structure a deal creatively. And what does that mean? I mean, that's seller financing with good terms, long amortization schedules, principal only or interest only periods, maybe deferring payments, whatever the case is. And also creating some sort of safety valves. Can I get to 5 years and extend for a 2% origination fee if rates are still really high? The person that can figure out how to buy real estate creatively and hold for a long period of time is going to win. And I do think this debt market is going to cause more deals on the street where you can pick up at 30, 40% off, 20% off, whatever the case is. And remember, just because a deal is performing great doesn't mean other assets in that seller's portfolio are, and they might need to liquidate fast. I think there's still an amazing opportunity to buy real estate.
I think you're right. Hearing you say that, I agree completely. Like if you have the ability to get creative, if you know how to solve a problem, if you can buy real estate creatively, that's where you win. I mean, at the end of the day, the more properties you can stack, preferably cash flow positive properties, and hold, you'll be in a better position, years down the road than you would be if you didn't buy these properties.
I think too, and I agree, Gabe. I mean, if you can ride properties throughout the cycle, I mean, we're in a country, and I say this all the time, doesn't matter if it's the left or the right, we plan for the devaluation of the dollar, and the plan is about 3%. Sometimes that goes up to 8%, sometimes it goes to 2%, but the target is basically 3% deflation of our dollar. And so if you can take advantage of that, get on the right side of the coin, you can win over time. But that is if you can hold it. I talk to investors who buy properties, and this is why we're cash flow investors. You've got to have the property's got to pay for itself, and it's got to pay for itself in a way, ideally, that it's independent. You don't have to feed it, and it's also giving you cash and lifestyle design. So I think when I look at this market today, I think there's more opportunities today than even a year ago when the Fed increased rates and inflation went up so fast. People were kind of holding off from selling because they're like, well, interest rates come down. They're waiting.
12 months. Give me 12 months.
Yeah. I mean, today you're seeing a lot of people going, look, like, okay, fine. I'll lower prices. I'll get creative. I've seen more deals in the last couple of weeks than I think we've seen in the last year. So when the market is scared, when there's uncertainty, whether it's political or it's the stock market or the bond market, uncertainty causes fear and it causes people to want to sell, especially when people are approaching those years. They don't want to ride through instability. They're 60, 65, they want to retire, they want to go play. That I think the opportunity is build relationships with folks who want to exit and be the solution for their transition. And if you're there and you're talking to them and you're building those relationships, then you can be the solution. And ideally, the deal comes together in a way that protects you. You've got good cash flow. And number one is like cash flow that can support higher debt than even today. So if you're getting a loan at 7%, make sure it can support 9 or 10% because you've got to have a delta because we don't know that rates are going to come down. Just because they went up, they could go up higher. We have no idea. And I think that's when I look at this, I don't want to predict anything because I don't think we can predict. My prediction is it's going to go up or down.
Things. You can't predict. Don't predict things.
I can't.
You're not a shaman, bro. You're just Mitch. Okay.
Well,
you're just Mitch.
It's funny because I went to business school. Oh yeah, the Gabe, he's back. So
Gabe, don't look at the Gabe directly in the eyes.
I went to business school and it was like, we had like these econ classes and there's all these professors who are pretty like accomplished in their own field, right? But one economist would have a completely different perspective than the other economist in the exact opposite direction. And they're basically right 50% of the time. And what it told me is like, no matter how much studying you do, you cannot put all variables into one sort of like direction.
I think also don't buy on thin margins. I think a lot of people did that. Like you said, oh, I'm going to underwrite. I'm going to buy a property, rates are going to be in 4s and I'm underwriting. In fact, I remember looked at a deal and it was like, oh, well, we're creating some buffer because rates might go up to 4 3/4. And you're like, dude, like, and these are people, a lot of that got in the bull run and they didn't ride. My first house I bought, this is aging me, was over 8%. That was a VA loan. So people that didn't ride like early 2000s, the '08 crash, even some older investors, like back in the 70s and 80s when interest rates were really high, like that's like these old sages. They're like, yeah, been here before, seen this. Also, like maximize your upside. So how do you create buffer if you're looking at deals? First of all, there's going to be more deals. There's always a reason for sellers to sell and maximize your upside. And that's what I love about commercial real estate, where you can force appreciate it. You, like Mitch and I are at we're in contract on a property right now where we know damn well that property will be worth over $1 million more in 1 year. 12 to 18 months, I should say, would beyond the shadow of a doubt, it absolutely will. The area fundamentals support it. It's well below market rent. There's some value add we can do. We can bring rents up that are more reasonable with the market. And also, we're riding inflation. The cost of living goes up, but the cost of rents go up, which drives value in your assets. So create some buffer.
Travis, do you think it's easier to buy property today or when you were buying property in the 70s?
I know what you're doing. And so I was born in 77 and I bought my first property in 1978. I was 1 year old. I had gone through the 0 to 100 elite program, which is fantastic that they could teach a 1-year-old how to buy real estate. So for those of you that are considering a mastermind, go to 0 to 100tribe.com and join.
Okay, he doesn't. Oh, look at that commercial. He doesn't look it, but he was born in the 70s, guys. I know we all think it's the 50s or whatever, but yeah, he was in the 70s.
I thought you were going to compliment me.
I did verify. Yeah. No.
I don't think it was a compliment. But no, what do you guys think of certain policy changes? Now, we have a guy in office. Now, some people absolutely hate Donald Trump. Some people absolutely love him. Some people are, I don't know if anyone's like in the middle. But aside from like personality and politics, we have a guy in office who his background is real estate investing. His background is business. And we know he brought back 100% bonus depreciation, which a lot of
bill. It's a big, beautiful bill. It's big and it's beautiful.
Yeah, it's the most beautiful. Everyone loves it.
A lot of investors are celebrating. They're celebrating the bonus depreciation. But I've seen multiple investors recently post online that is thinking about taking away property taxes. I don't know if you guys saw this. Like
I heard about
property
that.
taxes.
You can't do that. That's a regional. That's regional.
I get it. It's a county. It's a county level. But what would happen? How does that impact real estate? Right? Like maybe interest rates don't drop low, but all of a sudden you're factoring in. Could that happen? Like, do you think that could we come to a place where we don't have property taxes on any properties?
Oregon would be sad. They couldn't blow our money, our property tax dollars.
I know we have a lot of schools that are supported by property tax. Like, there's going to be some complications there. I think overall, though, him being bullish on real estate is interesting. We have, in the beginning, it was like the concept was that the government was a partner of real estate owners, investors, developers, because the founding fathers realized that it can't be government owned. It can't be government sanctioned. It can't be. So, when you look at like a lot of the taxes or the benefits, it's like because we're partners and they realize that the private sector needs to take care of our housing stock, industrial, retail, all kinds of commercial, because the government can't do it. So I don't know if the property tax thing is realistic or if that's going to go through.
Let me ask it this way. If the president was able to say, all right, we're eliminating property taxes, not just on owner occupied, on all properties, we're eliminating property taxes starting January 1st, 2026. Mitch and Travis, would you support that?
That's a difficult question because it's like who is not getting funded, right? Like Mitch mentioned schools. Like I certainly don't like to overpay taxes.
Gun to your head. You got 5 seconds, Travis.
Well, obviously the selfish piece of shit capitalist in me, yes, because if my expense line goes down, my net operating line goes up, apply a multiple, and then the value of my real estate goes up.
Travis is a yes. Right? Mitch, you got an extra 10 seconds because Travis was explaining himself.
Without all the variables, I'd say no. Because the problem is you've got to understand what property taxes fund. We need to understand what are the implications of that, where those funds come from. Like schools is one thing that's really important on our country. In fact, we don't even fund our schools enough. You've got schools throughout the entire country that are in dismay. So if we had a solution for that and I understood sort of the downhill effect, then I would be a yes, but I don't understand that. I mean, if you think about it, if property taxes went away, I think you would see an entirely new basis. In other words, a huge price jump in everything. Everything would just level up to a new plateau because you're taking away a massive expense line. So
I was going to qualify my answer with that, but we need to understand the downside, but I got interrupted. You got interrupted. Now you make me look like the asshole. So thanks, Mitch.
No, I don't think it makes you look like an asshole. Maybe it's the thing that disrupts the education system too, enough to change the education system, which is a very old, outdated system, right? So,
look, I only had I only had a couple seconds. So all I'm saying is like all the things downhill. I'd want to know how that affects that and how to solve those problems. But yeah, like fundamentally, I think that we need to consistently give real estate investors, entrepreneurs, developers more and more benefits. Because it's going to increase.
But what about those that say like they're wealthy enough?
That's great. Here's a great example of that. You've got this guy who's running for mayor in New York, who's and I don't know the details. I don't really understand his platform, but they're saying he's a self-proclaimed socialist. He's talking about rent freezes in New York. Like, what do you think about that? What do you think about this guy coming in and saying enough's enough? It's not fair that this guy graduated from college with this illustrious, social studies degree and can't live in New York and afford the $4,000 rent for his little apartment box. And so we should freeze rents. Is that okay?
No, it is fair because it's supply and demand. And what you get paid in this country is based on your economic impact.
So what's fair? Freezing rents and being a socialist, or not freezing rents and letting the free market be the free market?
Letting the free market. I feel like we should
You're saying the opposite as well.
No.
Like,
The free market.
Damn, you fucking communist. What are you talking about?
Where did Mitch go?
Mitch is a communist.
No, the free market has to, if you let the free market go and you actually cut red tape and let developers do what they do and real estate investors do what they do, we'll fix the housing problem. But when you have a country where you've got to apply for permits and soft costs are $250,000 and zoning laws everywhere, affordable housing is illegal in our country. It's not even illegal.
Well, so here's what happens though, when they freeze rents, investors flee. Like, I'm not going to go buy any real estate anywhere near New York. Or why would if rents are frozen, like there's this Pennsylvania law where they're looking at, for mobile home parks, rents can only go up 4% a year. And people think like, yeah, but you think about that, investors are going to flee. They're not going to put any capital into these properties. These properties are going to go blighted. They're going to get run down. They're going to fall down. And there's going to be safety and health hazards. And then everybody's going to blame the landlords for being slumlords. And the landlord's like, I have no incentive to invest in these properties. I have no investment. There's no incentive to come in and make these properties better because I can't get a return. But people don't think about this shit. They're just like, because all you need to be able to be is 18 years old and fog a mirror to vote these days.
So for people listening to this who maybe disagree with this, I have a question for you. If you go to college or you go get a technical skill,
they can't respond.
It's something to think about while you're driving your car,
they
right?
respond in the chat. We have an open chat. We have live listeners. We have an open chat.
And if you're driving your car, then you can say yes or no or whatever. We can argue from there. But here's the concept: if you make yourself more economically viable in our economy, right? More talent, whether that's a degree or certification or technical skill, whatever, and you work your ass off, should we put a cap on your income? So there's no incentive. In other words, if I just said, look, you can only get a 3% raise no matter what you do in our country, guess what your incentive is going to be? Nothing. You're just going to continue the same job. There's no incentive to improve yourself. And it's the same for property owners. There's absolutely no economic incentive to go put in new roads and playgrounds and gazebos for people to, kids to wait under while they're waiting for their bus, and to fix culverts and sewer systems. There's no incentive. You can't do it economically. It's funny because the liberal agenda is really attractive because it's free this and free that and cut that and decrease rents and all those things until you know how the world works. And then you realize it just doesn't work.
Would you agree with no cap on salaries in the private sector, but a cap on salaries in government jobs?
Dude, I think you tie everything back to supply and demand economics. And I don't know how you do that in federal jobs, but you got to how much value am I providing and what am I getting compensated? And this sort of like, oh, I've been working here for 20 years, so I should continue to get raises, but I work 3 hours a day. I take 20 breaks and I'm smoking cigarettes outside the whole time. I'm not saying that's all federal workers, but like, why should that person get a pay raise? Like, I'm a big merit base.
I did see that smokers actually work like 20% less than non-smokers.
So when it comes to government, though, if you think about government, if you said, look, like just theoretically, if you said, look, we're going to hire this person, a government worker, and he or she proves to cut, say, $20 to $30 million operating costs from this specific agency, I wouldn't have any problem paying them $1 million per year because they are economically impacting us they're saving massive amount of tax dollars. So I don't know if I'd cap either one, but I think it has to be based on economic impact, not just like, hey, I come and show up to work every day.
I've heard the same thing said another way. Like, we're all paid based on the value that we bring to the economy, not the value you bring. Like, I use the example, like a teacher may bring a lot of value to a student, but paid based on the value they bring to the economy, right? And so you even think like a professional sports athlete, right? Someone might say, well, they get paid way too much, but that athlete gets views, it gets people at the games, it pays the concessions, it pays all the workers, it pays for the viewers, all these things. So it actually impacts the economy greatly by this highly paid professional athlete, right? And I think real estate investors and big business owners very similarly, like you buy a property, you're taking the risk, you're taking on the debt. It's one less property that the government has to subsidize or worry about. So it's kind of an interesting lens to look through.
I was an entrepreneur. I owned a company. I had employees, like I provided jobs in healthcare, but there's a lot of downside, like big risk, but big reward, but also way risky. There's several times I almost went bankrupt, right? So should I get rewarded at the end of the day when I sold my company with a big payday? I think yeah. But the one thing I would hesitate, I know this is a real estate podcast, business podcast. The teacher thing's frustrating. My mom was a teacher. I do feel like the education system's outdated. I feel it's industrial age. We're teaching kids the wrong shit. They're going to high school, being taught how to go to college, going to college, taught how to be a worker, getting out. Now they're working 3 barista jobs, living in New York, pissed off that we're not subsidizing their $5,000 a month rent. Like we're not teaching these kids right. But teachers, man, these are people that care a lot, and they're impacting our children. And this is the future of our country. And I also see, even in our local school district, where you have people giving themselves raise at the district office, at the administration, but the teachers that are like interacting with the kids on a day-to-day basis are getting hosed. I think that's bullshit.
But there's also not a merit-based system within the teaching model. So like a great teacher sometimes is getting paid less than a teacher that should have been fired a decade ago, that's not engaging, that doesn't care about the kids. So it's like, it's a challenge.
Yeah, it's broken for sure.
Well, it's not just what they're teaching, but also, like you said, I mean, I know teachers in my town that are there every single day. They're working after hours with after school programs. They're taking care of minorities that may not have the resources after school or on weekends. They're funding their own classrooms because they're underfunded. You know, we're in a nice town with high property taxes. I don't know where the money goes, but they're underfunded.
That's what we're talking about. You don't know where the money goes. So eliminate the property taxes. I would take shittier roads and something to blow up the education system for no property taxes. It's good for the investor, and it's good for every single person that owns a house, and it'll be less costly for anyone that buys a house in the future. More money in your pocket, less money in the government's pocket.
Well, I agree. And I think that if we can ensure the education system is rebuilt, I think it's total bullshit though. And I watch teachers barely survive in our towns, and yet they are having a massive impact on human lives. And so I do have a heart for teachers.
Even in our local district, they have a $3 million shortfall. And my wife, being the honorary person that she is, they're like, well, there's a $3 million shortfall and teachers are getting cut, things like that. And she's like, well, okay, well, she actually emailed the superintendent, said, I want to see the payroll of the district office, the district personnel. And people didn't like that. People were like very reticent. They were hesitant. Like there's a conflict of interest if you're the one giving yourself raises, right? You're like, I've done a great job. I've been here a long time. You know, I'm going to give myself a raise. Like that's a problem.
I mean, we raise rents. So, I mean, I get it. I want to shift gears a little bit. I want to talk about affordability. So I'm seeing some interesting things. We all own mobile home parks. I was up against a situation where I had a small town say, hey, you can't bring in RVs. And now I'm seeing another situation where some of these local municipalities are really cracking down on any kind of RVs. And to me, it literally solves a problem for affordability. And I know that a lot of these local governments don't love mobile home parks. They want something developed. They want more tax revenue. But I'm wondering if you guys are seeing that as well. So small town in Oregon, we got note recently, they're saying, and these RVs have been there 20 plus years, some of as
I thought this was your park up in Idaho. Is it in Oregon?
No,
just across the border.
Idaho too. Both. This is two different situations. I'm just starting to see these local governments crack down specifically. So yes, one is in Idaho, one's in Oregon, but cracking down on any RVs being allowed in mobile home parks, which I find very interesting because it literally solves the affordability play.
We're living in such there's so many hypocrites. I mean, we saw it in our local town, just the mobile home park itself. Everybody at the cocktail party, they pat themselves on the back and they're all about, we need affordable housing. Well, you know, right, John, we absolutely need affordable housing. John, I'm sure glad you brought that up. I'm glad that, and you go to these city council meetings. I was on the Urban Renewal Advisory Committee. We need affordable housing, but nobody wants it in their backyard. They'll rip out a 60 pad mobile home park and display 60 families. Or like you said, Gabe, it's bullshit. It's hypocrisy.
Have you guys seen this specifically with RVs? Because I find it interesting where if you take maybe a lower income tenant, and like the Idaho property was interesting because we had scrapped these abandoned mobile homes, right? And then tenants brought in these really nice RVs. That's affordable housing. They own it. It's very expensive to move a mobile home, right? So they bring in these RVs. They set it up. It's way nicer than what was there before. And the city says there is no RVs allowed, right? And I just find it very interesting because it does solve a problem. It solves affordability. Have you guys come across this at all?
I don't think we've got any letters on RVs. I mean, I've heard about this, and I think that what Travis said is true. Is there's some hypocrisy there. I think that the city wants higher tax base, so they probably want to see that redeveloped. I'm guessing. I think they talk out of two sides of their mouth. But in the end, if we want affordable housing, we need to make it legal. Right now, it's illegal in most places. It's not even possible. And you look at like developers, a lot of these single family guys who develop homes, by the time they break ground, they're just several thousands of dollars into the home, and they all have to make a profit. So there's this sort of like concept where it's like, well, the developers and all these real estate people should make housing affordable. And what they don't realize is that there's a ton of red tape, and there's actually a lot of there's a lot of sort of headwinds by the city and the county leadership and state leadership to push against us, including like you're seeing, Gabe. I don't think people want people in RVs, which I don't understand. I mean, I'm in an RV right now, and I've got all the systems. I've got everything I need. We could live in this if we had to. I think RVs actually could be a huge part of our affordable housing solution.
Look at even like our portfolios. We've got several vacant mobile home pads. And if you want to bring in a mobile home, like a new single wide, by the time you buy it, ship it, and, set it, skirt it, put some porches on it. I mean, we're at, what are you, $80,000 to $100,000 in?
That's costly for an average tenant at a mobile home park.
And you have thousands of vacant pads across the country with full utilities, electrical, water, sewer, everything ready to go.
And you got $80,000 for a home, and with a high interest rate, because Fannie, Freddie, there's not agency loans for these people to buy these homes. Or you could put an RV in, like you said.
Somebody already owns, and they own it free and clear, and they're going to go pay $400, $500 a month to live in a nice home.
Well, you got these neighbors, though. They're like, that's unsightly. But they were at the city council meeting last week, virtue signaling about we need more affordable housing. But they're the ones whispering to the city council members like, that's unsightly. We don't want that. And they're the ones with the money. They're the ones that are paying the property taxes. And so then your city council members or the legislation isn't in their favor. I agree, man. It's a bigger problem. This not in my backyard thing. We need affordable housing, but not in my backyard thing. That's a problem. People should look in the mirror when it comes to that, I believe. So what are you going to do about that? Are you just going to, in true Gabe fashion, just tell the city to fuck off and keep moving RVs?
That's not the route I'm going to take. I mean, we have some long-term tenants there, and those tenants, they want to be there. They choose to live there. It's affordable housing for them, and it destroys the property as an owner if we have to kick them out. So in that situation, if they're forced to leave, nobody wins. It's bad for the tenants. It's bad for us as owners and investors. So we're going to fight it. And I hope the tenants do too, on their own behalf, and fight for them having affordable housing. They've lived there for years.
There is a solution, right? Like you mentioned, there's tens of thousands of vacant pads that have full utility hookups that are just sitting there. And you've got people, and you think about it, like I personally, if I was in that boat, which I've been close to several times in my life, I would rather live in a nice RV in a nice park where there's a playground, or there's a gazebo and barbecue pits my kids can play. Like, yeah, I would rather that than live in like a Section 8 box in a box, in the wrong side of town in a tough apartment complex for my kids. Like, I'd rather that.
Well, the other problem, if those RVs can't be in a park, then they end up on the side of the road somewhere, which is actually what a lot of these local governments don't want. They don't want camping. They don't want these streets filled with these RVs.
Yeah, it's also much more achievable to have a nice RV. I mean, an RV is like a vehicle, right? You can go, there's actually financing available. There's a lot of different financing options versus mobile homes. And so you can go finance an RV, a $30,000 RV for relatively low payments and achieve some sort of quality of housing versus the mobile homes. You're talking 3 times that and very little financing available. So I don't know. It's frustrating because I think there's a big opportunity loss.
Yeah. How you guys feeling about it? Different asset classes these days. So we're mobile home park investors. There's some internal dialogue that I think Mitch, you and I had with guys over at Coast who we love, and they have several thousand apartment units. In fact, they asset manage my 200 units in Oklahoma City. They help Gabe out with their construction stuff. But it's interesting. They're coming in to help us out on managing our mobile home park portfolio. And we're talking to him, JT over there, and he's saying, apartments are tough. Multifamily's tough. There was an overbuild, I think. So that's in several markets, like you mentioned, probably Austin, Memphis. There's the other markets where that's put downward pressure on rents. But you take that coupled with an upward pressure in expenses, right? Insurance in a lot of markets is quadrupled, especially in like wind and weather states, Oklahoma City, like wind and hail, things like that. The cost of maintenance, the cost of salaries, the cost of materials have gone way up. Rents are down. So multifamily is got kicked in the face. And I was kind of joking with him tongue in cheek, like, wait till you see mobile home parks. We love mobile home parks. You can really control the expenses. Maybe you can get a 3 to 4% rent bump in a lot of multifamily, mobile home parks, depending on where you buy, you can get a lot more. And we also tie this back to interest rates being really high, right? Tied to the treasury markets and those sorts of things. Do we see multifamily coming back? Do we see an opportunity in apartment complexes coming back? Because there's only so many mobile home parks out there. And there's only, we're talking residential. Gabe, I know you live triple net industrial, but apartments in general, what do you guys think?
I'll give you my opinion. This is not, I'm not taking statistical data. I'm going off of what I've seen and the investors in my network and the investors that I've talked to, and just kind of my opinion here and what I've seen. I do think, like, blanket statement, you can kick ass in every single asset class. Every asset class, there's opportunities. Specifically to multifamily, I see a lot of people hurt right now. Big investors, small investors, everything in between. And I think a lot of that is a lot of the folks I know that have been raising capital, the younger investors, the newer investors, no fault of their own. It was very easy to raise capital. And it was very easy to put your money into a deal. And so, and we've talked about this before, a lot of these younger, newer investors were buying on such slim margins in a very low interest rate environment, and prices just going up and up and up. And so it was really easy to buy these properties. And now these notes, as Travis mentioned earlier at the beginning of the podcast, some of these loans are coming due. And these properties are backwards. And I think I don't have the data to support it, but I think a lot of money's been raised in the multifamily sector. Everybody I knew was jumping into multifamily. And yes, there's opportunities, but a lot of these multifamily guys are getting their ass kicked because they bought in this low interest rate environment, slim margins, and now they're coming up on that 5-year mark in the bank. They can't refi. They can't sell for what they owe. And I think the unknown is we just don't know yet what the banks are going to do. Banks don't want these back on their books. I do know some, those that have the money, which a lot of people don't, are doing cash in refinances where they're actually paying the bank to keep the loan. But most of these folks are not in that position, and they're going to have to negotiate with the banks. And I actually think the banks will want to negotiate with some of these.
They're negotiating. I'm hearing multiple deals where banks they learned their lesson in 2008. They don't want these things back, for sure.
And I have too with some of the operators that can handle it. But what we don't know is some of these operators that are in a position where they can't unfuck these situations and the banks don't want the property back. That's the big unknown. What happens to those loans? What happens to those properties? Is it a buying opportunity for a future investor or a bigger investor? I don't really know. And I don't think we're going to really know for another year or so.
But do we see the asset class coming back to where someone can buy a multifamily, cash flow these things, make money?
I think, yes, I see it coming back. I think that by nature of the industry, there's ups and downs in apartments, storage. Those two, I think, both experience bigger ups and downs because I think that there's a fluctuation in inventory. And it's a consistent overbuilt, underbuilt situation. So right now you've got an overbuilt situation. People stop pulling permits. They stop breaking ground. Then there's absorption. Then they go into an underbuilt situation. So, and then of course that rate cycle. I think when you look at mobile home parks, and I'm biased, this is what we invest in, but for a reason, I actually, more and more I learn about comparing mobile home parks to other asset classes. I think you're actually playing.
What Mitch wants to say is don't buy mobile home parks. Yeah. Next asset class.
No, that's all right.
I'm joking.
That's all right. I actually think you're playing an entirely different game though, because you have an asset class that has a decreasing inventory. There's no other asset class that I know about that has a decreasing inventory.
Are we under 40,000? Less than 40,000 mobile home parks yet in the US?
I don't know the number. I thought it was right over maybe 42, somewhere in there, but I'm guessing. I'm not sure if it's under 40.
Once that drops under 40, it'll be interesting. I mean, I've read that it's about 1% a year it's going down.
That's what I've heard too. So I think you're just talking about the advantages of a mobile home park are sort of unfair in my opinion, because apartment complexes, they can put up more apartments, and they do. And it's overbuilt, underbuilt, overbuilt, underbuilt. We go through these cycles. So yes, they'll come back because it'll go into an underbuilt situation, and it takes 6 months to pull permits and to break ground, that whole thing. But with mobile home parks, if you can find a good deal and hold it over time, you're in a market that does not have increasing inventory, but has increasing demand. So I think it's a fundamentally totally different industry than any other asset class.
I 100% agree. I also, and I'm curious to your guys' take on this, I actually call bullshit on the multifamily being like underdeveloped, right? Because I feel like there's so many times throughout, I'm thinking like the 20 years of investing, like we're behind X amount of millions of multifamily. Like we need more supply. We need more supply, more supply, more supply. I actually don't believe it, because where are these people living now? And then when they build these things, it always gets overbuilt. And I see big apartment complexes all the time. Like they can't always fill them, right? So I actually kind of call bullshit on this, even these periods where they're like, we need 20 million more apartment units. Like, where does that actually come from? Is that actually true? Like they're all living somewhere right now. It's not like the homeless guy on the street is going to go rent that new bougie ass apartment. So when they say, oh, we're 20 million homes, behind in supply or in demand, like, is that actually true?
It's a zero-sum game though. Like if you have an area that, like where we live in the Northwest, where you could say, hey, we're underbuilt, we're undersupply, because if you built 1,000 apartments, they would fill up. Well, those people don't just appear out of nowhere. They actually vacate another apartment. So is it really true that you're underbuilt? Maybe you're underbuilt in certain areas, but not as a macro sort of picture. Now, if you had a population that was growing, a massive growth of population in the United States, which I don't believe is the case, then we could get in an underbuilt situation, but I don't think that's the case.
So that's exactly my point. You have an area with this net migration. People are moving there, right? So then they're like, oh, we need 10,000 more units. We need to get 10,000 more units on the market. But these big developers, that could take years. You talk about 6 months of permitting. It takes years. So then there's this net migration. 2 years later, there's not. 2 years later, it's stagnant. And now you have 10,000 more units on the market.
I think there's multiple factors. I think, right, in that example, like, okay, someone wins and someone loses people, right? So people are vacating California. So maybe there's certain neighborhoods in California where these apartments are getting emptied out and they're getting blighted, where people are moving. They were moving to Austin, right? That's a great example. But Austin's, like you said, there's such a delay in demand versus supply meeting that demand. And then you also there's also, I think people underestimate new home ownership, like I was talking about earlier. I think home ownership has been like the holy grail. Like that's when you've made it. You buy your first home. Maybe that's bullshit. Maybe people are getting away from that as the American dream. But we're seeing that right now where I think there was an overbuild, and it's also regionally specific, right? Like I don't think there was a lot built in OKC, but there's a ton built in Memphis. Like we have our buddy Shane who owns a couple of B-class complexes in Memphis where he saw his occupancy and rents dip, but now that's starting to get absorbed. So now he's coming back up. For whatever reason, where did these people come from? I don't know. You have JT who talks about all of these empty apartment units that were overbuilt are going to all get absorbed. You have this article that I read that says right now landlords are winning because people can't buy their first home, right? Because interest rates and supply are up. So I think occupancy is going to absorb a lot of these units that were overbuilt. But then what happens if and when rates come back down, and now there's this pent up demand of first time home buyers, now people are going to exit those. So you forget about the home buyers market too.
Do you think home ownership is still the American dream?
I've read different articles. I mean, some people like move into the inner cities. It's trendy. The young people move in. They're renters. They want to be simple. They're minimalists. They want to be renters. And then there's sort of this exodus, like Portland, like, the inner city of Portland's just a complete shithole, right? People have lost big. We know investors that are losing big there, but then people move out to the outer ring and buy a home. So I don't know. I think it's just a moment in time. What's trending now?
But what about like just the idea? Now we're all real estate investors here, and real estate has served us well, and we all own our homes. But I mean, even the idea, like, do you think that some people shouldn't own their home? Like,
Grant Cardone doesn't own his home.
I know. Yeah. Cardone doesn't own his primary residence, right? So, I mean, is it a trick? Like giving your, 40% of your income to the bank for the next 30 years just to have it paid off? A lot of people don't have it paid off, or they pay it off and then they die. Is that really the American dream? Like just kind of pushing against, like, yes, go buy as much real estate as possible. But I'm talking about, like, is home ownership really, will that get the average person ahead?
I think that's shifting. I think the younger generations are starting to feel like, what's the point? Why, especially when it's so expensive to own a home, when I can rent and I can have more mobility and I can move around the country. I don't know, Mitch, what do you think?
Well, I think it depends on who you are. And I think if you say the average person is going to work every day, they're investing their 401k, and they're not really not investing in anything else. And so I think for the average person, they look at the house as like, okay, there's this piggy bank. And if I look at, my parents, for example, who own their homes versus other people in their same generation who didn't own their homes, my parents are exponentially more wealthy than the people who did not own their homes over time. So it depends on who you are. My parents also weren't necessarily investing in other things, and neither were their friends. So like, if you just said, look, if you're going to rent this place or own this place for the next 30 years, but you're not going to invest in other real estate, other businesses, other things, and you're going to work your job, then I think that, yes, there is a benefit there. There's tax benefits, there's debt pay down, all appreciation ideally. So for your average person, I would say over 30 years, you're ahead. But if you're talking about somebody who's not average and they're out investing in real estate and they're leveraging other people's money, or they're raising capital or using creative debt, I don't really know if it's necessary. And so I just think it depends on who you are. But I look at my parents, they've done amazing by owning their home. That's been a big impact.
Guys like Kiyosaki that famously say, like, your home, your primary residence is not an asset. And you get Grant Cardone repeating very similarly. He's like, I don't own the home I live in. You should be renting.
I think you hit it, Mitch. I think it depends on the circumstance. My mom, school teacher, never made a lot of money, had a pension, but bought a home in an area that's she's a millionaire because of her home, her one home. She's a retired school teacher. But Midwest might be different, where you don't have the appreciation that we've seen in the coastal towns. But I do agree, but if you're looking at us, if we're just looking at the economics of it, it is a liability. It sucks cash out. I think you hit it on the head. So we're all going to go sell our homes now.
We can all sell our homes and start a commune.
I like that. I think too, though, what is your ability to make money on your money? So like, for example, if you don't have a lot of ability to make money on your money, maybe spending money on a mortgage and lawn care and landscaping, all those things, is the best use for your dollars. But if you're like, look, I can have this apartment that's $2,000 a month, right? The mortgage would have been $2,000, but I don't have any maintenance. I don't have any roofs and HVACs and all those things. And I can go maximize those dollars. Then I think you get a bigger return. I just think it depends on who you are.
If you take the savings and go out and buy cash flow real estate, if you just blow it, then you're building equity in nothing. You're not building a business. You're not building assets, or just put more into the stock market if that's all you know, into the equities market. Although I feel like the equities market, I don't know, man, the equities market's just like bad news, stocks go up. Good news, stocks go up. I feel like the market's just got his head in the sand and just doesn't care. We have over $1 trillion in student or revolving non-secured debt. I don't know. I don't understand. I don't understand why the stock market keeps just going up and up and up.
Everything always comes back to, gosh, I'm glad I own real estate and I should keep buying real estate.
For those of you that are listening, man, reach out to us on our website, 0to100tribe.com. Come check out Elite if you think that might be a good fit for you. But we'd love to have you in our world and in our community. So, Gabe, as always, awesome hanging out with you. Look forward to doing it again in person soon.
Likewise.